Good evening, ladies and gentlemen, and welcome to the Strategy of the Week for Friday, April the 26th. This is Dan Misch. I'm the Director of Retirement Services for VectorVest, and I'm happy to present tonight's video, which is titled Enhanced ETF Retirement Portfolios Using VectorVest Analysis. There is truly an overwhelming amount of information available with intentions of teaching you how to trade your retirement funds. Via the U.S. Postal Service, our email accounts, and on TV, we get recommendations on different stocks and strategies all the time. CNBC.com recently started tracking 3 portfolios using ETFs which are designed for different stages in life. They put together a portfolio for 30-year-olds, one for 50-year-olds, and one for 70-year-olds. And these portfolios were unveiled on April the 9th of this year. And you can see the number of positions they were going to hold in each of those portfolios. So our objective tonight is to see how we can use VectorVest to analyze these ETFs or any other stock that you have questions about by putting them into a VectorVest watch list. Next, we're going to build a custom search using that new watch list in the Unisearch tool. And then we'll put that new search to the test using the backtester. And one final piece will be to compare these results to a similar strategy already designed by VectorVest. We are now in the VectorVest 7 program, and we are under the Viewers tab. And on the left side of this screen, there's a section titled Watch Lists. I will highlight my watch lists, which you all have your own version of, and then I'll click on the icon above there to create a new list. We are going to focus tonight on the portfolio designed for 50-year-olds, so I'll keep that in mind when I give this a name. Once you click on Add and you see that name underneath my watch lists, you can go right up to the center of your screen in the white box where it says Add Symbols, and you can start typing in symbols, simply separating them by a comma. Once you have all of the symbols you want typed out, simply hit Enter on your keyboard or click the Add button, and your watch list will appear. Now for the 50-year-old portfolio, CNBC had 17 total symbols, and you can see we have all 17 typed in here. And you can do your analysis individually on these ETFs by looking at the columns going down or scrolling across to the right through the various rows, depending on what type of analysis you're looking for. Or you can look at the watch list average down at the bottom of the page to see how overall your basket of stocks is performing. For an example, you can see that this current basket of 17 ETFs has a VST of 1.03. Now what I want to know is how have these performed during the most recent market upturn? Well, we had a confirmed up issued on December the 18th of 2012, which lasted all the way until the confirmed down that was just issued 2 weeks ago on April the 15th of 2013. So my first task is to change our date box from today's current date back to December of last year. And now these stocks will be ranked according to their information on the 18th of December. What I'm also going to do is remove one of these ETFs from our list for testing. GDX down at the bottom is an ETF that tracks gold. VectorVest had issued a sell signal on gold using our Midas Touch timing system on December the 14th, and therefore we would not buy or test this position. So while it's highlighted, I'll click on Delete, and it will be removed. Now we'll just do a quick test of all the symbols shown here. And the quick test will originally bring us to the current time frame. Once again, clicking on the date box, you can choose the end date to stop on the 15th, as indicated by that red square telling you we had a confirmed down. And rerunning the test will tell us that our basket of 15 stocks had 12 winners, 3 losers, with an average return of 3.12%. And that equates to an annual rate of return of 9.6. So overall, it didn't do too bad. That's compared to overall market performance as measured by the VVC of 5.3% during that time frame, or nearly a 17% ARR. I have already built watch lists for the 30-year-old and the 70-year-old portfolio as well, and I did this same performance testing over the same time frame, and they were also in the 3% gains. So again, we're going to continue to focus on the 50-year-old portfolio for tonight's video. One thing I will let you know is that the symbols were mainly the same between the 30, 50, and 70-year-old portfolio. The weighting of the stocks was a bit different. As an example, the 30-year-old had more money towards the equity or stock ETFs and less in bonds and or cash. And the 70-year-old was just the opposite, more heavily weighted towards bonds and cash and less exposure to equities. But again, most of the symbols were the same. What we can also do is scroll this bar over to the right until we see the volume columns, and you'll notice that some of these ETFs have rather low volume and therefore are not really that liquid. So to help with that, we are going to move over into the Unisearch tab. And this will be a similar process to what we just did with the watch list. The first thing I'll do is highlight my long searches, which you all have access to, and once again click on the symbol to create a new search. Now I can add parameters to sort through the roughly 8,000 stocks that we are tracking in our program. First, under parameter, I will select stocks, and then filter by, and then I'll click on watch list. And that will put that as our parameter. Under operator, I will choose equals, and moving over to value, when you click on there, it will pull open all of the watch lists you currently have saved in your login for VectorVest. So by opening up my watch lists, I can put a check mark next to the 50-year-old and click on OK. Now whenever we run the search, we'll only be looking at symbols that are contained in that list. We're going to put one more parameter in here, so I'll click in the box underneath and choose stocks, price volume, average volume, which is a 50-day moving average on the volume. Under operator, I will choose greater than or equal to, and our value here is going to be 100,000. And that's it. Now we can click on the Save Disk and choose to save this search. So keeping our naming the same, I'll call this a 50-year-old ETF portfolio. It is a long search, and we will keep it in the My Long Searches. When you click on OK, that search will stay there now until you decide to remove it. So also keeping things equal, what I'm going to do is change the date box here in the Unisearch back to that confirmed update in December. And we'll go ahead and run this search to see how many stocks we get back. All right, now down below we have 12 positions that were returned. So that 100,000 volume requirement did remove 5 positions from the original list of 17. And once again, I will quick test all of these positions. It kept the date from the confirmed up to the confirmed down stored for me. And now we have a 2.92% return, still with a 9% ARR, and the numbers haven't changed for the VVC. Out of the 12 positions, 9 winners, 3 losers. So the next step in testing how these ETFs would do is to move them into the backtester. Now all of the steps that I've used to create the tests we're going to show for the remainder of this video can be found in the PDF links in tonight's views. To begin, I'll click on New, and our account settings at the top, we will leave them the same. All of our defaults will remain intact. Under market timing, I will uncheck the box as we are not going to use market timing for what we're going to call a baseline run. Under our automation rules, we're going to go look for that search we created. Under stop criteria, we will choose none for our baseline run. And then again, under more settings to keep things equal, we'll just assume that those ETFs that were removed because of their volume requirement would also be removed from this test. So we're going to try to maintain 12 positions, opening all 12 immediately. We want to give this a full 1-year test, so we'll begin on the 25th of April in 2012 and run it through yesterday's date, the 25th of 2013. I'll give this a name of 50-year-old baseline, and we'll go ahead and run the test. With our first test done, we can analyze the results. Again, we're looking at the past 1 year. Our $100,000 portfolio has grown to $108,298. That's an 8.3% total gain, and since we're testing 1 year, our ARR will be exactly the same. The commissions were very low at $119. That is 12 trades times $9.95. And our drawdown was 6%. So all in all, not too bad. However, looking at the equity curve down below, you can see that this portfolio went underwater as soon as it started trading and had to fight for several months to get back up to even ground before finally taking off to that 8% return. Now we need to see what we can do to start optimizing some of the results. And the next test I would do would be adding in some market timing. So if I right-click on this back test and create a copy, I will put a check mark in the market timing box, and once again you will need to own the auto tester or have a trial of it in order to have access to this section of the back tester. Once that box is checked, I'm going to select the Greenlight Buyer RT Kicker timing list, and the rules for that list will be described down below. For our automation rules up, we will once again use that 50-year-old ETF portfolio search. We're still not going to incorporate any stops just yet. We'll leave that on none, and under more settings, I will set it all to be exactly the same as the other test. The only difference will be we are now using market timing. Automation rules down, we will go to cash. Automation rules neutral, we will take no action. Our test period is the same. I'll simply change the name of this. Instead of it being called the baseline, we'll make sure we title it so we know that it used that timing system. And once again, click Finish and Run. And now we can compare this to our baseline and see that our total return has fallen from 8.3 to 7.2%. Now that did come at a cost of slightly more commissions as we were trading as the market went both up and down. However, our drawdown has been reduced down to 2.6%, much better than the original 6. And looking at the equity curve down below, we stayed out of trouble, went slightly negative for just a short period of time before fighting our way back to those gains. So all in all, the market timing did enhance this portfolio. And you can keep testing with various stops and timing and market entry points as you choose here in the back tester. We're going to stop right here with these two tests, and now we're going to see what we can do to compare it to something VectorVest already has in the program. So once again, I'm going to move us over to the Unisearch tool. And in the Unisearch, we do have a folder called ETFs, which has both bullish and bearish ETF strategies in there. The one at the top is called Best Performing ETFs, confirmed up. It has a green arrow next to it telling me it is bullish. And the description down below tells me that this strategy finds ETFs that are currently rated a buy or hold. They are sorted so that the stocks with the highest combination of relative timing and comfort index come to the top of the list. and this search is intended to be used during a confirmed up situation. And just over to the right, you can see the parameters that were used to build this search. You can also see the sort at the top, just above the date calendar. And our calendar is still set to that confirmed up on December the 18th, and if I click on Run Search, we'll get a list of stocks that met this search parameters. And once again, I'm going to quick test the top 12 positions to see how we fare versus the other portfolio. Right, the 50-year-old ETF portfolio had a quick test of just around 3% during this time. Best performing ETFs is at 17%. That's a total ARR of nearly 53%, handily beating what are still the same VVC numbers shown below. Of these 12 ETFs, we have 11 winners and 1 loser, and you can see some of them have some very nice double-digit returns. Now, I would like to point out that some of the symbols shown here are leveraged ETFs, and we're going to try to keep things fair, so we'll come back and address that in just a moment. So our next step would be to take the best performing ETFs confirmed up search and put it through the same back test that we did with the 50-year-old retirement portfolio. And here in the back tester, I have already run these tests for us. And so we'll begin here with the best performing ETF's baseline run without using market timing over the past 1 year. We have a 7.75% return. Again, the commissions are low because we only had the 12 initial purchases. And our drawdown was 4.7%. I then ran that same strategy using the green light buyer with the RT kicker, and our returns went up considerably. We're now up to $119,200 of our total value. That's a 19.25% return. The commissions are still very manageable, less than $500 for the year, and our drawdown once again improved to 4.2%. And again, you can look at the equity curve shown down below and see that aside from one small point where you were negative less than 1%, this portfolio has been climbing very nicely. Now, I did point out that our best performing ETF search as it stands right now will find you some of those leveraged ETFs, which of course take on more risk and can therefore give you more return. And some of our subscribers out there may not be able to trade those leveraged ETFs. As an example, some IRA accounts will not allow you to use any leveraged ETFs. So what I'm going to do is one more time go back into the Unisearch tab, and we're going to add one line of parameters right underneath here where we will look at stocks, we will filter by, and once again filter by a watch list. And that operator will be equal, and when we click under value, once again all of the watch lists in your program come up, and there is a folder of ETF watch lists already built into the program, and I am going to put a check mark next to non-leveraged ETFs regular. And when you click on Run Search, you will get a different basket of stocks. Some may be the same if they were not leveraged, and some have been eliminated. And once again, what you want to do is just save this, and you can choose to save it in the ETFs group, or you could go back down to My Long Searches, and I will title this Best Performing ETFs Non-Leveraged. And again, that search will be there for you until you decide to remove it. And so I've put that search already through the backtester as well. Best performing ETFs non-leveraged with no market timing, a 6.2% total return, and a very low 2.3% drawdown. Adding in the Greenlight Buyer RT Kicker timing system to that, increased it from 6.2 to 13.5% total return. Commissions are up, drawdown is still very manageable, and once again, we have a very favorable looking equity curve, and this was achieved without taking any of the risk from the leveraged ETFs. And so we've created a table here. Tells you the strategy name. First looking at the 50-year-old ETF portfolio. Just doing a quick test of the 16 stocks we would test gave us that return of 3.1. A unisearch over that same time frame with the volume parameter included gave us just below 3%. Our initial backtest was at 8.3, and the market timing took those returns down but did increase the look of our equity curve. And below that, you can see the results for both the best performing ETFs confirmed up, leveraged and non-leveraged. Since they're not in a watch list, the first quick test was not available. And then you can view the results for yourself as we went over the various time frames and added in those market timing signals. Well, our hope here tonight has been not to knock any of the competition that's out there, but to show you how you can utilize the tools in the VectorVest program to make you a better trader. You can put these stocks into a watch list, you can build searches to test them out, and you can backtest them until you optimize your results to the point that fit your trading plan. That's the end of the presentation for Friday the 26th. Please give us a call at the number on your screen if you have any questions. Thank you.